Hello everyone, you're watching Crypto TV, India's first 24/7 streaming crypto channel. I am Vinita Chatterjee. Ticker Plant, a leading global content provider in the financial information services industry and the holding company of the knowledge portal CryptoWire, has collaborated with Google Cloud. The partnership with Google is aimed to develop the CryptoWire ecosystem that will cater to all stakeholders of the cryptocurrency and blockchain industry on a common platform. Now let's look at today's headlines. Digital coins issued to employees by Indian crypto exchanges may have tax implications. House of Lords panel sees no case for a UK CBDC. Coinbase acquires FairX to offer crypto derivatives. Payment processor Checkout.com raises $1 billion, eyes Web3 push. Simplify files application with SEC to launch a Web3 ETF. Visa and ConsenSys team up to test central bank digital currencies. Pakistan's central bank and government wants all-out crypto ban. China plans to allow NFT development by separating them from crypto. Gap Inc. launches first NFT collection. Cryptocurrency or digital assets issued by crypto exchanges to employees as an incentive may be closely scrutinized by the tax authorities. The question the employees will have to deal with is whether these incentives can be treated as income and what will be the resultant tax rate on such digital assets. Many exchanges have launched their own tokens and offer them as part of an employee's annual salary based on the Employees Participation Plan or ESOP model. Top cryptocurrency exchanges and the coins they issue have already come under the taxman's lens, with the GST department claiming several exchanges did not pay tax on coins issued. The tax department contended that GST of 18% is applicable on the coins that were sold by the exchange. A panel led by the members of the House of Lords or the upper house of the Parliament has concluded that there is no convincing case for the UK to have a central bank digital currency or CBDC. While CBDC may provide some advantages, it could present significant challenges for financial stability and the protection of privacy, the committee, which was set in September, said in its report. The potential benefits of a CBDC are overstated or achievable through less risky alternatives, Lord Forsyth of Drumlin, chair of the committee, said. The Economic Affairs Committee of the UK's upper house set up the panel to explore how a CBDC might affect the role of the Bank of England, monetary policy and the financial sector. The Bank of England has been exploring a potential CBDC as a means of future-proofing fiat currencies from the rise in the use of privately issued digital currencies, among other objectives such as impact on monetary policy and boosting digital payments. Crypto exchange Coinbase is acquiring FairX, a US-based derivatives platform, to offer these products in the US. At present, only a few exchanges allow US investors to trade Bitcoin and other futures, with cash-settled products being both the most popular and the longest available products. FTX.US acquired LedgerX last August with a similar aim, while Crypto.com, which recently launched an advertisement campaign starring Matt Damon, also bought a retail derivatives platform known as Nadex late last year. FairX, which launched its exchange in May 2021, is a designated contract market or DCM registered with the Commodities Futures Trading Commission (CFTC), which means it is allowed to offer futures products in the US. Checkout.com, the London-based payments processor which counts FTX, Coinbase and Crypto.com among its customers, said it raised $1 billion to drive US market growth, develop its technology platform and boost Web3 efforts. The latest round of the funding values the payment processor at $40 billion. Checkout.com, in a statement, said it will renew its focus on fintech, software, food delivery, travel, e-commerce, and crypto merchants after the funding. The company expects to triple the number of North American employees this year. The company now has more than 1,700 employees in 19 countries. Investors in the funding round included Altimeter Capital, Dragoneer Investment Group, Franklin Templeton, GIC, Insight Partners, the Qatar Investment Authority, Tiger Global, and the Oxford Endowment Fund, among others. Simplify Asset Management, set up only in 2020, has filed an application with the US Securities and Exchange Commission for an exchange-traded fund focused on Web3. Simplify plans to launch its Simplify Volt Web3 ETF that will track Web3 companies that are expected to benefit from technology infrastructure. If approved, the funds will be listed and traded on the New York Stock Exchange. The fund would not invest directly in the cryptocurrencies but will allocate up to 10% of its total assets in the Grayscale Bitcoin Trust. Grayscale is a unit of Digital Currency Group. The ETF would be actively managed by Simplify Asset Management CEO and co-founder Paul Kim and Chief Investment Officer and co-founder David Burns. Visa Inc. has joined hands with blockchain software company ConsenSys Inc. to offer central banks a way to test retail applications for the issuance of digital currencies. Visa plans to launch a pilot project after elaborate discussions with roughly 30 central banks. ConsenSys, led by Ethereum co-founder Joseph Lubin, has worked with several central banks to test CBDCs. Visa currently offers payment cards linked to USD Coin, a stablecoin issued by a consortium that includes Circle Internet Financial Inc. Payment service providers see government-backed digital assets as a safe and secure way to utilize blockchain, which aims to be faster and more efficient than traditional electronic transactions. MasterCard too launched a similar CBDC testing platform in 2020. In a new joint report, the State Bank of Pakistan, the country's central bank, and federal government have recommended an outright ban on crypto assets. The report, submitted to the Sindh High Court yesterday, apart from recommending ban on ownership of crypto assets, also suggested penalties against digital asset exchanges. The report was a result of a directive from the Lahore High Court in October asking the federal government and central bank to clarify its stand around digital assets amid a high-profile court case involving the creator of fraudulent cryptocurrency, Bither Cash. If the ban enters into law, Pakistan will join countries including China and Saudi Arabia, which have already declared digital assets illegal. CryptoWire, a crypto super app which also includes the channel Crypto TV, has announced the launch of India's first index of cryptocurrencies, also known as IC15. The IC15 index is aimed at helping investors track the performance of top 15 widely traded liquid cryptocurrencies listed on leading crypto exchanges across the globe. Well, that was the bulletin of this hour. Keep watching your favorite channel, Crypto TV, India's first 24/7 streaming crypto channel. I'm Vinita Chatterjee, signing off.